Hey, my name is Jason Nicholson and welcome to my YouTube channel. In this video, I want to talk about what's the right thing to do if you need a new mortgage right now. Should you fix at a rate that you can get today? Should you wait for rates to drop? Or should you consider looking at a tracker mortgage and riding those rates down as they drop over the next few months? Well, in this video, we're going to tell you what you should do, what's going on with tracker rates and what's going on with mortgage rates as a whole. If you're new around here and you haven't done already, please do subscribe to the channel over there and hit that bell notification. We've got new property content every single day. We talk interest rates, house prices, property investing, and much, much more. And let's get some views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm and help the channel grow to where it is today. So thanks to everyone that does that. So, it's a difficult choice at the moment, isn't it? A lot of people have the question on this channel all the time. Should I get a tracker rate? Are mortgage rates going to go down? What's the rate going to be in 2026? Well, a lot of that is hard to really determine, but there are things that guide us. And so one of the things that we want to look at is, what rate does your bank get money at? Now, they get their money even from the bigger banks. So you would borrow from HSBC, you'd borrow from NatWest, same as me. But they borrow from bigger banks and they borrow on something called the Sonia swap rate. And those have been dropping recently. And that is important to understand. So while the Bank of England base rate dropping is important, the Sonia swap rate is more of a prediction of where they feel Bank of England rates are going to go. And the expectation is that the Bank of England will get close to 3.5% by the end of this year. That means if you're on a tracker mortgage, you're going to get significant drops a few times this year, which is a positive thing. And so the prediction, the Mystic Meg over here, the Sonia swap, what are they saying at the moment? They don't update this every day. The last update was on the 16th of May, and that looks pretty good at the moment. So they're saying that the 2-year rate is 3.77% and the 5-year rate is at 3.78%. So when you're looking at deals, and often we all look at deals and we think, how can a bank make any money on that? Well, because they're not borrowing from the Bank of England, they're borrowing at these kind of rates. These are the rates that they can get in the market, which means that's why they can offer you a rate at 3.99% because they can get the money at 3.77%, and then they'll make additional money with fees on top of that. So that's how that works. So rates and where they've been over the last few years, because if you were on a tracker rate in probably around 2022 when we had this channel, you could have been having a real nasty surprise. So let's have a look at where rates were on average with mortgage rates over the last few years. So in 2021, you could get a rate of around 1%. I didn't. The best rate I've got is like 1.5%. I'm sure I've seen people commenting on the channel that have 1.25%. But the best rate you could have got around then was around 1%, which is fantastic. Then obviously rates started going up. So in 2022, the average rate was 2.5%. And that felt like a massive jump at the time. A lot about buy-to-let landlords, that was a huge jump because we pay interest only. And so if our payment went from 1.5% to 3%, our payments have effectively doubled. And so that was really, really not great. Now, Liz Truss then became Prime Minister for that short window of time, and the markets really had zero faith in her. She did something called the mini budget, if you recall that, and rates went through the roof. The rates then went up to, in 2023, 6.83%. Huge amount. And people did refinance at those levels. Maybe you did. Let me know in the comments. But it was awful. It slowed the market down massively and not many housing transactions happened. So after that, rates started going down. The Bank of England started cutting in 2024. And we've seen since then over 1% drop off the base rate, which is really, really good. So what would you look at the moment? So let's have a look at some scenarios. A 2-year fixed at the moment, these are the most popular. And that is what a lot of the market are going for. Now, you should always speak to a broker, but a lot of people are going on a 2-year fix because they believe that 2 years from now, the interest rates will be significantly lower. And that is also what the swap rate feels, that the rates are moving down. And the Bank of England have even said it themselves, that they think rates are going to start moving down. And where they are today, at 4.25%, is what they're calling restrictive. It's stopping business activity, it's stopping people spending, it's slowing down the economy. They fully are aware of that. So that is an option if you want the most popular and you believe that rates are going to go down. So what about 5-year rates? Well, 5-year rates are the cheapest at the moment. And what that indicates to us is that lenders are trying to get you locked in for longer because they also believe rates are going to go down. And so they want to get you at a higher rate for 5 years rather than you going back to them in a few years and getting a 2.5% rate or something there or thereabouts. That is their strategy by making the 5-year rate cheaper than the 2-year rate. So it gives you certainty though on a 5 year. So if you're someone that likes certainty, you like to know this is definitely what I'm going to be paying each and every month, then a 5 year is the best option for you. What about trackers? Now, if you time a tracker wrongly, which if you got a tracker in 2021 and then it went up and tracked the market, well, the Bank of England rate didn't go to 6.83, but the mortgages did because they didn't have any faith in the government. You would have gone from a 1% mortgage potentially, or base rate, to 5.25, and the trackers normally are 0.5% on top of what the Bank of England charge. So right now, with a base rate of 4.25%, you would pay 4.75%. So it is about timing the market right. And we are in a rate cutting cycle at the moment. They're not going to cut as quickly as we hope. They've been doing the rounds in interviews recently, and they've said we might pause for a short period of time before we start cutting rates again. And I've told you, if you watch the channel, that they hint and imply at where they're going to go without telling you directly. And that's what they're saying in interviews at the moment, that they might pause. So we're probably not going to see a rate cut in June. But a tracker is a great consideration at the moment. Would I get a tracker? Totally. I, at the moment, would consider a tracker, but I would look at all the small print and make sure you know what you're getting into. Speak to a broker to find out. You want to make sure you get one where there's no penalties, where you can leave at any time. That is a common feature on tracker mortgages. You want to make sure it's around 0.5 percentage point above the Bank of England rate, no higher. I've seen trackers that are 2% above. That's not what you want. You want 0.5%, and you want to know that you can get out of it if rates start to plummet, because then you might want to fix. If you're in a tracker and rates go down to 2%, then I would consider swapping onto a fixed rate product and fixing for 5 years at that point. Let me know what you would do and what you're considering with your mortgages at the moment. Do comment below, do smash like, do subscribe, and also check out all the other content on the channel. We've got 1,200 videos now. Maybe start with this one right here.